On the stock market, Tesla, a company that makes electric cars, has had a terrible year. 2022 wasn't a good year for Tesla. During this time, the stock market was a living hell. Tesla shares lost more than 65% of their value over the course of the year, ending the year at $123.18 per share. At the start of 2022, it cost $352.26. This drop means that the market value has dropped by more than $720 billion in just 1 year, which is a real disaster for shareholders. Hey guys, welcome to our channel, Fast Forward. In today's episode, we're going to tell you about how Elon Musk needs to change a few things that are going to turn Teslastock around in 2023. Let's dig in. Dan Ives, an analyst at Wedbush and one of the most optimistic people about Tesla, says it is possible for the company to get out of the downward spiral it is in right now. To change negative feelings about the Tesla story, he just listed 10 things Musk needs to do by 2023. Number 1. Twitter should have a new chief executive officer by the end of January. I've suggested that Twitter get a new CEO before the end of the month of January. Stop selling stock, and no more boy who cried wolf or Pinocchio situation. The analyst thinks Musk should lay out conservative 2023 delivery and targets given the darker macro. The 50% growth target is not happening in our opinion, with 35% delivery growth a more hittable and realistic goal for 2023. Ives told the billionaire that he needs to focus on Tesla again, because Musk is the heart and lungs of Tesla and vice versa. Number 2. Stop selling Tesla shares on his own. Ives also suggested that Musk shouldn't be selling shares on his own, but formally adopt a 10b5-1 plan so investors know there is no major selling block around the corner, as Musk sold roughly $40 billion of Tesla stock the past year. So investors know there isn't a big sale coming up soon, since Musk had already sold more than $40 billion worth of Tesla stock in the past year. Number 3. By the end of the year 2023, Elon Musk should decide when the Cybertruck should be delivered. I've suggested Musk should announce Cybertruck deliveries hitting the road by the end of 2023. Timing is key here, with competition from all angles, and worries production woes will push this into 2024. According to him, the 50% growth goal isn't a reasonable one to set, but to think that a growth goal of over 35% in delivery is a more reasonable and attainable goal for 2023. Number 4. Elon should refocus on Tesla more than Twitter. Ives gave the statistic on how Tesla stocks have dropped about 66% so far this year, and more than 35% in just the last month. Elon Musk should be considering Tesla more than Twitter. Number 5. Give investors a more realistic time for when Tesla electric cars will be delivered. Timing is very important here because there is a competition everywhere, and there are worries that problems with production could push this back to 2024. Giga Austin is fully operational and will be a key part of making sure that Tesla's next plan to grow is a success. Number 6. Change some things about Tesla's board of directors so that there are more people with experience in technology and electric cars. Number 7. Start a program to buy back Tesla shares. I've said Musk should be more real about his margin structures. With the stock at this level, Elon should make a buyback program to earn back the trust of the market and his shares. Number 8. Push for more financial transparency at Tesla about how the company handles its margins. Because production and sales in China are going up and Giga Berlin and Austin are getting busier, we think this is the company's best-kept secret. Number 9. Don't talk about political issues on Twitter. The more political Musk gets on Twitter, the less likely it is that electric cars will be sold to the general public. Number 10. Use the strategic plan to achieve his Twitter goals. The biggest worry right now is that Twitter is losing money and its sponsors are leaving, for now, which will cause Twitter to lose even more money and Musk to sell more shares of his company, Tesla. Once a new CEO has been chosen, Twitter should have a 3-year plan that shows that the platform could become such as a super app, X, WeChat 2.0, etc. Elon Musk, the CEO of Tesla, said that this bad thing that happened on the stock market had both macroeconomic and geopolitical roots. On December 8th, the billionaire explained himself by saying, "Macro conditions are hard. Energy in Europe, real estate in China, and outrageous Fed rates in the USA. Because of the conflict between Russia and Ukraine, there is an energy crisis in Europe right now, which is hurting the economy. Inflation is at a level that hasn't been seen in 40 years, so the Federal Reserve, also known as the Fed, has been steadily raising interest rates over the past few months. The current monetary policy makes people worry that the economy will have a hard landing, which is another name for a recession. But many individual Tesla or TSLE shareholders think that the CEO's actions after he bought the social network Twitter are to blame for the stock's drop on the stock market. This opinion is based on the assumption that the Techno King's analysis is correct. Elon has now taken away $600 billion from Tesla's worth, but the board of directors hasn't done anything about it. It is not acceptable at all. On December 16th, Ross Gerber, an individual stockholder, talks about how sad he was. As a result of the criticism, they started talking to each other. Tesla is working better than it has ever been. We are not in charge of the Federal Reserve right now. This is at the heart of the problem, Musk answered. But Gerber insisted, I agree with you that the Fed is doing a bad job and that the economy as a whole is getting worse. But Tesla is doing very well and should be ahead of its competitors in the tech industry, like Apple should have at least 2 Apples worth of physical education. On a bad day, Tesla shares should be worth $250. 3 days later, Gerber asked the board to find a new CEO for the company because the price of Tesla stock was still going down. The price of Tesla stock right now shows how much the company is worth without a CEO. Good job, Tesla's board of directors. We need to make some changes. The email was sent on December 20th. Some people think that the recent drop in Tesla's stock price is because the billionaire bought Twitter. The business mogul decided to buy Twitter so that, as he puts it, he can make it a place where people can say whatever they wanted. Since April 22nd, when he tried to buy the social network, the internet billionaire has only been thinking about Twitter. He is always making trouble, attacking people he sees as his enemies, and taking over the conversation on the platform. The problem is that Twitter's stock price has been going down since Tesla made a $44 billion offer to buy it. Musk finished the deal on October 27th, which was less than 2 months ago. During this short period, the price of Tesla stock fell by almost 39%. Alexander Edwards, who is the head of a research-based consulting firm called Strategic Vision, says, we've seen Tesla's brand lose value in every way, from core safety to refinement, over the past year. These problems are made worse by the fact that Democrats are more likely to buy battery electric cars or BEVs, and Democrats have usually been against what Musk has done with Twitter. As the stories on Twitter make the cars seem less fun and further away from the people who buy them most, it will be harder and harder to sell Tesla cars. Without a doubt, the bulls have lost a lot of money trading Tesla so far in 2023, and putting any of the above suggestions into action may be the easiest way to fix a bad investment thesis. Ives, on the other hand, still has the stock rating as outperform and has set a price tag of $175. Tesla shares closed trading on Thursday at $112. As of the beginning of November, Ives had kept their price target for the stock at $250. One of the things that put more pressure on the stock price was the news that Tesla will offer $7,500 discounts on Model 3 and Model Y cars delivered in the United States in December. This story has been going around for 2 weeks. In the meantime, there have been rumors that Tesla is running its main plant in Shanghai with a very small staff. Investors have not been happy with the information either. In recent days, a number of analysts have given the company a lower rating because they think there will be a big drop in demand in 2023. So that's it. I hope you enjoyed watching the video. Stay tuned for more wonderful stuff. And don't forget to like our video and subscribe to our channel so you don't miss any of the recent updates. Thank you for watching.